Okay, so good afternoon and welcome everyone. So today's webinar is called Benchmark My Practice and Profit Improvement Strategies. Presenting today, we have Paula Wheatley, who is a partner at Charnwood Accountants. Paula has been with Charnwood for 12 years and specialises in dealing with solicitor practices. DG Legal has recommended Charnwood Accountants to more than 30 law firms because of their knowledge of the legal sector as well as the quality of their service overall. My name is Aaron and I'm an assistant consultant here at DG Legal. A recording of today's webinar and a copy of the slides will be sent to you tomorrow. And if you have any questions, because we're in webinar mode, we can't see or hear you. So if you do have any questions or want to raise any queries, then please put them in the question and answers box and Paula will either address your questions as she goes through the slides and the webinar or make time for them at the end. So without further ado, I shall hand over to Paula.
Thank you. Hello, everybody. So thank you all for joining me today for this webinar on profit improvement. I'll just take a moment to give you some background about us as a firm. So we formed in 2004 and started working with solicitors quite quickly. We utilised a tax saving model which generated savings in excess of £5 million for our clients. Unfortunately, this model is now closed, but during that time, we did build a large number of solicitor clients, which covered a vast range of legal sectors. So we created Charnwood for Solicitors. I'm one of the partners and I head up the solicitors department. And over the years, my roles developed from the standard services of completing the audit and preparing the accounts to assisting cashiers and practice managers with their internal compliance. And now my role involves spending time with the partners of firms and discussing the development of their business and their succession planning. I've therefore witnessed each area of practice in action and feel that I'm able to add real value across the firm for all of the clients that I act for. So today's webinar will discuss ways you can improve your profits within your firm. I will try and answer questions as I'm going along, but I will also leave time at the end if you have any. So my mission for today for you is to ensure that everyone listening goes away with something, at least one thing, that they can apply as a tip that I've given today to their business. So let's get stuck in. So the first thing is to look at how you're doing as a firm. So when we look at this, we look at industry averages and we talk about something called super profit. This is the profit for running the business after you've paid yourself a salary for your role. So essentially the perk of ownership. So industry average notional salary for a partner is around £85,000 and the average super profit is around £100,000. So this means that each partner should be making at least £185,000 per annum in profit to feel that perk of running a business. And then once you've established if you're achieving that super profit, you then delve into the three main areas of the business to consider where any improvements can be made in this area. So the considerations you need to make are increasing staff efficiency, increasing income, and finally reducing your overhead. So I want to work today through each of these in turn. So let's start with staff efficiency. So the main cost in any solicitor's practice is the staff costs, and this is a split between fee earners and support staff. So for fee earners, the industry average salary is around £60,000 at the moment, and that should equate to about 30% of the fees generated. So in other words, a fee earner on £60,000 should be able to bring into the business around £200,000 a year of fees. Then we move on to the support staff. And typically in solicitors' practices, they're really heavily geared with support staff, where historically we've had one-to-one ratios. But now firms are understanding that that's not really realistic anymore, and they're moving more towards a 2 fee earners to 1 support staff, or even 3 fee earners to 1 support staff member. But no matter what ratio you've got, the important question when it comes to staff is, are they worth it? And the only way to work this out is to just know what they're doing. So I wanted to pose a question to you just for you guys to ponder on. So if you were running a retail shop, you'd know exactly what products you sold, you'd know how much you sold them for, and therefore you'd know what profit you were making. Simple as that. So why as solicitors don't we monitor the same thing closely? And your product is your time. So therefore, that's what you should be monitoring. So that's where we move on to time recording, everybody's favourite subject when I talk to them in our meetings. So time recording is incredibly important, and the vast majority of our firms don't do it, or if they do, they don't do it well. Like they'll only record chargeable time, for instance. So ideally, all time should be recorded. So if you work an 8-hour day, then you should complete a timesheet for every staff member for all 8 hours. And by doing this, you can very quickly identify where your inefficiencies lie. And it will also help you see who your star employees are. So timesheets should be completed for all of your fixed fee work as well, so that you can monitor profitability on the fixed fee elements, and it should include all of your support staff when you're doing timesheets as well. And the key to identifying what levels of the non-chargeable time versus the billing time is acceptable once you've looked at this timesheet information is to create a fee earner matrix. So here's an example of a fee earner matrix for you. What a matrix does is it calculates what turnover each staff member is capable of generating and then compares it to what's actually happening. So if we take this table here, we've got fee earners on the left, all listed down. Then you've got hours per annum. Now, hours per annum is the actual hours a fee earner spends working. So if they're part-time, it will be slightly less than somebody who's full-time, but it's just the total hours they can work in the business. And then you get to expected chargeability. Now, a fee earner that has very few management responsibilities and is only therefore generating fees for the firm would usually be about 85% chargeable. And in that 85% factors in holidays and CPD time as well. Whereas a fee earner that has department responsibilities, for example, so does things such as staff performance reviews or attends management meetings, they may only be 60% chargeable. So you need to assess each fee earner and enter their chargeability capability into that column there. And then next you get chargeable hours, and this is a simple multiplication of the hours per annum multiplied by the expected chargeability, and it gets what they're capable of charging to clients for the year. You then apply their charge out rate and you get their expected total chargeable time and therefore expected annual turnover. Now, in our experience of doing this exercise, it's very enlightening to clients as there's usually a 30 to 50% shortfall in staff performance to turnover. And the only way you will ever get underneath why this is happening is if you can review their timesheets, which is why it's so important to record 100% of the time, because otherwise reviewing those timesheets will be completely ineffective. So let's look at some of the reasons why there could be a shortfall in that turnover. So as I mentioned, most firms will only record chargeable time. And in reality, this has little benefit because staff then have the ability to only put down the time they feel is right for the fee being delivered, regardless of how long it took. So they could be doing this because their charge out rates are unrealistic, or because they've misquoted for the work and haven't discussed the fee issues with the client, or some of the similar reason to that makes them want to hide that information. Many firms also don't do recording of their fixed fee work, as I've previously mentioned. So not doing so means you'll never know if you're undercharging for those fixed fees, or if a staff member is lacking training to carry out the fixed fee work quickly and efficiently, because let's face it, most fixed fee work requires quick repetition to get it done. Then we come on to that non-chargeable time. So if you're recording the non-chargeable time, it means you can track what staff are doing when they aren't generating fees for the firm. So there could be genuine reasons, things like networking or any management responsibilities that they have. But if someone's putting 2 hours a day down to just admin with no further explanation, and they have their own secretary, then it shows that either the secretary is overworked, so they're doing stuff themselves, or the secretary is not performing properly, or even that the fee earner could be using admin as an excuse for their incomplete timesheet because they haven't been productive enough all day and they've been on social media or too busy chatting or things like that. So it just helps to highlight these things to you. So that was a really quick explanation of how to start looking at the staff performance, and you can delve into that in much more detail, and then you can start looking at the correlation between staff to turnover as well. But if you did find that whistle stop interesting and want to develop it further within your own firm, then please do watch my previous webinar on the importance of time recording and the art of delegation. So during this webinar, I discussed the fee earner matrix in a lot more detail and give you a good example of where you think everything might look okay, but once you start delving down, you can see it probably isn't. It also talks about doing timesheets in more detail. And then the overall outcome of it is that it moves on to show how looking at all of that and improving the staff performance can help benefit the partners, because then they can spend more of their free time on business development and therefore help the growth of business. So that's why I haven't gone into huge amounts of detail on this, because you can watch that one in greater detail there. So if you'd like to watch it, I am going to ask DG Legal to give the link out to that when they send the slides around later on today. Okay. Next, we'll move on to overhead costs. So non-salary overheads, a percentage of fee income, is around 28% at the moment, and that's based on industry averages. So to put that into real figures for you, if your turnover is £1 million, if you could make a 2% reduction in that ratio, that would be worth £20,000 of pure profit to you, just by making some simple savings here or there. So let's look at what kind of savings you can make. So PI insurance, that's one of the biggest costs to most firms outside of the staff costs. In January 2023, the Law Society Gazette reported that at least 9 firms had ceased trading in the previous 3 months due to not being able to get PI insurance cover. And in the prior year, 37 firms had closed due to not meeting their PI costs. Now, it's a really difficult time as fraud's increasing and a lot of the insurers are exiting the market, which makes it increasingly difficult for you to actually get a good deal. And also because most practices will offer the high street services such as conveyancing and probate, those are considered the high risk areas, which by default causes the insurance premium to be higher. So you just need to think of things that you can do to help the situation. So this can include fixing for longer terms, such as 18 months, or also using a broker to try and get you the best deal. You also need to look at how you can reduce your risk factors internally to show good standing to the insurers. So ways you can do this are to have a dedicated risk manager, so that you can show you're taking risk seriously. You should have internal procedures manuals and risk policies. Again, I've covered internal procedures manuals in another webinar for DG Legal, so if you need any inspiration, please do go and watch it. You can also ensure that you demonstrate that you have high level of cybersecurity in place, because as I said, the frauds are increasing, and so those are things that you can easily demonstrate and help to reduce those premiums. You also need to have high standards of client care, case management, and people management in place. And if you demonstrate that you have good financial management information in place, it can also help the situation. But overall, my main comment to you is please don't just go for the cheapest insurer, because they might not give you the best cover. So you just need to search around and be sure that you're doing the right thing. So next we've got business rates. Simply here, the main thing you can do is consider using an agent to challenge your current rates. As an example, as a firm, Charnwood, we recently had a 21% reduction and a £10,000 refund after we challenged ours, so it's worth looking into. And then we move on to leases. So many firms I see have expensive leases in place, and rather than owning the equipment outright, which can be the cheaper option, they will go ahead and lease. So the simplest answer here is if you can, buy, but before you do so, consider whether you still need it. So pre-COVID, I would go and visit my solicitors' practices, and there'd probably be one of those large industrial sized printers in every single department, maybe every room even, they'd be everywhere. And they're really expensive. But now so many of my firms since COVID have moved to a much more paperless approach. And so therefore, do you actually need that level of printer available to the team now? And could actually one printer per full floor be enough? And that's a simple way of reducing some quite high costs for the firm. Next, we move on to utilising technology. So many firms are still very paper-based, but they will use solicitors' systems that do actually allow for some really good electronic files. And put simply, the paper-based firms need to move with the times and liberate those paper files. It's the only way to free up space, reduce storage costs. It will make the office look tidier, but also for succession purposes, a business that's very streamlined, computer-based, doesn't have clunky files and old IT equipment everywhere, is much more valuable. And so it will be easier for onward sale if you do try and move to a paper-based, a paperless system rather than being your big audit files. Now, to practice what we preach, I thought I would show you all about Charnwood for a moment. I'll keep it brief, but in 2019, we were looking at buying premises to build bespoke offices because we were outgrowing our current ones. We put the search on hold when COVID happened, and the result was that we were forced to go paperless and work from home. So we had this huge room plus offsite storage that was full of files that we weren't using anymore. So we embraced the paperless, we did a huge cull of paper, and we redesigned the existing office into a much more inviting space for clients. We actually ended up having more space for the staff, and we can hold some really good meetings in our space now. So I've got some pictures. So you can see the top left was a very small section of the files that we actually got rid of. And then the picture in the middle used to be a huge storage room where we kept all of our paper files. So it just shows you what you can achieve if you do embrace technology. Okay, going back then. So we've got to utilising technology. So utilities. Now, I'm sure everyone's sighing inwardly at the thought of utilities in the last few months, but there's not an awful lot we can say here. Light and heat costs, for example, are increasing dramatically, have increased dramatically. All I can say is just use a broker to take the headache away from you and see if you can get a good rate that you can fix into. It's the simplest and easiest way of dealing with it at this stage. And then finally, you've got your financing side, and one of the issues can be expensive financing. So what I mean here is the interest cost of using short-term financing because you haven't factored everything into your working capital needs. So the cheapest and simplest way of resolving this is to set up a savings account and set aside a regular amount each month to start building up for VAT, corporation tax, personal tax, PI renewals, practicing certificates, all the big one-off annual costs really. Just set aside some money in the build-up to needing to pay for them. If you can't do this, then there is a likelihood that you're either overdrawing from the business yourselves as partners, or you're just not actually making enough profit. And so there's a bigger picture to look at. So this is an area that really does deserve your absolute attention and consideration, and something that you should really be talking to your accountants about to see where you might be going wrong if that's the case. Okay, so some good practice comments for your overhead management. So as I said, there's a significant increase in fraud going along. Just to give you an example, we've had 4 clients with combined losses of over £100,000 in recent times. So it's getting worse and worse. So you do really need to be on it. So a simple thing just to try and help you along is to just consider who authorises invoices for payment and how they're authorised. A lot of it's been through email interceptions where it's not actually the person who's emailing you that's saying, please can you make this payment for £10,000, things like that. So if you can get a better way of authorising those invoices and even a more streamlined process, you might create some printing savings there as well. But in that process, the most important thing I would suggest is that if anybody who deals with making payments gets asked to change bank details or add a new payee to the bank at all, they should phone either the supplier or the partner, whoever it is that's asked, phone them directly, speak to their regular contact and confirm that that change is actually legitimate and needs to be actioned. And then that will cause a lot less problems down the line. Another good point is to consider if you've got a purchase authorisations policy. So who in the business can do the buying? Do you have a buying limit? Is it that perhaps staff can spend a notional or discretionary amount on certain items, like if they're going out to networking, etc.? But actually, if it's a bigger amount, like they want to get some leaflets printed and it will cost a few £100s, should they get prior authorization from someone in management or somebody higher? Also consider whether you've got a budget for some of these costs and you want to monitor how that's progressing through the year. Because, for instance, you're marketing your entertaining budgets to you, that you're thinking they're developing the firm and they will bring you turnover, but you need to see the correlation of that actually happening. So if you can see a marketing spend and you can see a direct result that it's won you stuff, brilliant, keep on with it, but you do need to monitor it. And then that leads on to financial monitoring as well. So do you even have management accounts? If not, why not? They're really important and you need to know how your business is doing ongoing. And if you do have some management accounts, are they showing good enough information? So all accounts, I would say, is the management accounts that you receive should show your current year in the first column and then have the preceding 4 years so that you can see how you're comparing over time. And then it's really easy to identify any big fluctuations in your costs. So if you can see that something's gradually going up over time, then you need to be asking yourself why. Now, it could be legitimate. It could be that actually turnover's increased, staff salaries have increased, and therefore, as a direct result, your computer spends had to increase because you've had to facilitate, say, 10 new staff members. So that's okay. That's understandable. You can see why that's happening. But I've had clients recently where, as their example, their COVID, their postage and stationery spend through COVID dipped to next to nothing because they weren't posting stuff out and they were working at home. Then they thought they've become more efficient and more streamlined. And yeah, it cracked up a bit, but nothing major. And then the following year, it's boomed right back up. So it's like they've gone back to their old ways. And so you'd be questioning, well, if we could achieve it before, why can't we carry on achieving it? Because that was saving you expense. So those are things you need to keep an eye on through your management accounts, and having out of date information is not going to help you keep on top of that. Okay, so let's move on to income. So there are 4 factors that make up your income generation. That's number of leads, conversion rate, number of transactions, and average sale price. If you multiply all of those together, you get your fee income. Now, just saying all those out, you can sound slightly mind-blowing and make you think, what on earth does that mean? So I thought the simplest way of dealing with this was just to put it into an example for you. So my example here, baseline, is what my regular solicitor's practice does every day without doing anything special, anything out of the ordinary. So they've got 1,000 leads and they manage to convert 50% of those. So they get 500 customers. They each do 1 transaction, which gives an average sale price of 2,500. And so their standard revenue on an ongoing basis is 1.25 million. Now, in example 1, that same client upsells wills with conveyancing. So they increase the number of transactions marginally and also get a bit of follow-on probate work. So this alone increased their turnover by 5%. So just working through the numbers to explain that. So again, they had their 1,000 leads, 50% conversion rate is 500 customers, but their number of transactions has gone from 1 to 1.05 for that 5% increase. And that on their average selling price, which again hasn't changed, is given 62,500 of extra turnover, which is where you get your 5% from. And then if we look at example 2, the same firm, they increased the number of transactions as per example 1, but they've also added active lead follow-up and also increased their average selling price. So an increase in conversion rate of 3%, which is where here we had 50% conversion rate, and now we've got 53% conversion rate. So that gave 525 customers now. We've already got that increase in number of transactions, and they've increased their average selling price by 5%. That's given them an extra £197,000 in turnover, or 15.676% increase. So really what I'm trying to point out to you here and show you is that by making marginal changes in each area, you can actually make a really big impact on the firm. So it's easy said than done is probably what you're thinking. So the next slide, this one here, just gives you a whole host of ways that you can consider dealing with them. I don't propose reading them all out to you because obviously they're all geared at all different kinds of industries. But the main thing you need to consider is it's not a one size fits all. You've got to try it out and you've got to work out what works for you as a firm. So if I use Charnwood Accountants as an example, we do very little in the way of advertising. Instead, we actually build close relationships with our clients, which make them become excellent referral sources. And it's so much easier to upsell to them because we know them well and we can demonstrate what value we can add. And I mean, Aaron said it at the start for me, really. DG Legal are a really good referral source of mine. We work really closely together and we've got an excellent working relationship. So they sell me, they enable me to win work because I do such a good job and explain things well to them. I'll blow my own trumpet there. But if you then compared that to a conveyancing firm, for instance, I would actually expect the complete opposite. So I would expect a much larger spending on your advertising budget. And then because you want to see your name getting out there to as many people as possible. So advertising is key. And then you'd want your fixed fees to be competitive, which means you would need to push for a really high conversion rate after inquiry, which could well come down to how quickly you can start the work as well. So you'd need to factor that into your thought processes. So as I said, elements of it can be trial and error, but the main point is just making those small marginal gains can have a huge impact on the firm as a whole. Excuse me. No, benchmarking. So you might be thinking, okay, well, I make enough profit. I perhaps get to about the super profit figure. How do I really get under this? How do I understand it? So just really simple thing for you to go and do. On our website, we have a generate your own benchmarking survey. So this report asks you to input some key data in order to create 8 KPIs. The hardest information for you to find will be your staff salary costs, because we ask you the total fee earner salaries, total support staff salaries, and then ask you how many of each of those staff you have. That is the hardest figure to work out, and really internally you should know it. And the rest can be picked up from your management accounts or year-end accounts as figures in total. So the rest are really quite straightforward to input. But what that does is compares to your industry averages, and it will give you some feedback about how you're doing compared to the industry. I'd encourage you to do this because it will help you identify where you're doing well and where improvements are needed, and then ultimately to help you increase those profits. So just to give you an example so that you can see what it looks like. So the report gives an overall business snapshot and gives you a red, amber or green conclusion on the last page of the report. These are 10% either side of the industry averages. So if this example got an amber, so you're working around within the 10% margin of the industry averages, so you're doing fine. You'd get green if you were exceeding those industry averages and doing way better. So it's quite a straightforward explanation as to how you're doing. Okay, so I hope that gave you a snapshot in how you can improve your profitability in the firm. As I said, it is a snapshot, and I have done other more detailed webinars to go into a lot of this in further depth. As I mentioned, there's your internal policies one to help you with your insurance, and there's a more detailed time recording and delegation one to help you with improving your staff performance. So do go and have a look at those if you want to know any more. But what I want to say to you now is, off the back of this, my shameless part, we want to grow our solicitors department, and we want to work with clients that want to understand this kind of thing and develop themselves. So off the back of this webinar, I will offer a free 2-hour meeting to assist with completing the benchmarking report, and also set some targets so that you can help to develop your firm further. And finally, we work with solicitors for all different kinds of activities. So not just being our clients and us doing the work for you, we also do third-party tax services. So we can do the CGT reports on divorces and estates cases. We can do the 30-day, which is now 60-day CGT reporting on conveyancing transactions. We can do business valuations for disputes and expert witnesses. We offer retainer services for ongoing tax advice for your team when you've got queries along the way. We do tax planning for corporate transactions, and we can also assist with tax planning in complex trust matters. Okay. So thank you for listening. I haven't had any questions submitted on the Q&A yet, but if anybody does want to submit anything now or contact me afterwards to talk about your own firm in more detail, then please do let me know, because I'd love to speak to you. Okay, thank you very much for listening.
Thank you very much, Paula, for presenting that to us all. So just a reminder to everybody, the slides and a recording of the webinar will be sent over to everybody tomorrow. And this afternoon, you should receive an email asking you to rate the experience out of 5 stars. If you have enjoyed and found value in it, then we do please ask that you give us a 5-star review and just leave a line of feedback as to what you enjoyed and any other comments that you have. And just to double check, I don't think, no, we haven't had any questions come in. So yeah, that's it, ticks all the boxes. So yes, on that note, wish you all a good day, and thank you for attending again.
Thank you all, bye. Great, thanks, Aaron.
Cheers, thanks, Paula.
Bye.
Bye.